if there's a beacon for the fixed income sector, this is the man. Jim Grant of Grant's Interest Rate Observer. Jim, let's get right into it. I don't know. Listen, I don't mind the president yakking about the Fed as long as he doesn't make policies or do anything crazy directly to the Fed. But his latest tweet, he's envious of the ECB and the European central banks. That is about the, I don't know, that is way out there in the fat tail range of logic. Your comment?
Well, I think he's talking his book as a former leveraged real estate speculator. And indeed, if that were the case, you'd want the ECB to be on your side.
Well, the problem with having the ECB on the side of somebody who wants to borrow money cheap is that in the end, really, many borrowers don't get fantastic rates. What they get is really nasty returns on large quantities of paper that they're looking to keep, quote unquote, safe.
Oh, yes, indeed. Well, this word safe, Rick, is a kind of a puzzle. You see it a lot modifying the word government and then bonds, as if there's something intrinsically safe about a bond that's priced to yield less than nothing to maturity. So count me confused on the application of this word safe to the fixed income markets of today.
You know, right now everybody's preoccupied with the yield curve, and of course at some point there's going to be a recession. But what I think about is this notion that if the lower and more negative rates go, that sparks an attitude to buy more that pushes them lower, even more negative. Isn't that exactly what's going on in U.S. rates? And it says far less about the economy than it does about that dynamic?
I think it's true. I think that lower rates beget still lower rates, and radical policy begets still more radical policy. That's the way it's been for 10 years. I'm not sure where it ends. I guess it ends with a tweet. But it will be interesting to watch.
You know, and that's the key. All traders really want to know is exactly how it ends. And everybody thinks it's going to end really poorly. But yet, 3 decades later, Japan is still manipulating, and I haven't seen any major rocky knockout punches, just a slow dwindle. Is that the model for the globe?
I think the tempo for the globe is faster. Everything about China is, as they say in the Chicago Symphony Orchestra, adagio. I think it does this monetary drama with a much higher gold price. That's my firm and perhaps predictable idea, Rick.
All right, and finally, I guess the last point I want to make is we're always preoccupied with currency manipulation. Why is it we speak so rarely of the asset price manipulation you referenced in your letter with the ECB, the Bank of Japan, and the Swiss National? Yeah, well, do it. You have 30 seconds. Talk about how bad that is.
Let us not forget BlackRock, which is pressing the ECB to now go buy common stocks, or failing that, to actually give money to the citizens of the Eurozone. We have suggested at Grants that what they ought to do is to give people kind of gift certificates for BlackRock mutual funds. That's probably the more desirable way of manipulating asset prices in the modern age. But nobody seems to be standing up for the price mechanism. But Rick, let us join hands and affirm our loyalty to the price mechanism.
Absolutely. Jim Grant, without market signals, nobody knows where they're at on the map of pricing.